Imagine this scenario for a moment. You've been saving, researching, and dreaming about it for months. You've just signed the papers, a stack of documents promising a future of mobility and style, and the keys to a brand new car are in your hand, a tangible symbol of your hard work and aspirations. That new car smell, that unmistakable aroma of fresh materials and untapped potential, the feeling of success. It's intoxicating, a rush of accomplishment that washes over you. You post a picture online, eager to share your joy with the world, and the likes roll in, validating your purchase and amplifying the excitement. The monthly payment seems manageable, just a small part of your salary, a reasonable price to pay for the freedom and convenience this car provides. You drive off the lot, music playing, windows down, feeling on top of the world, ready to conquer any road that lies ahead. But what if I told you this dream, this seemingly perfect scenario, could quietly turn into a financial nightmare, slowly eroding your wealth and limiting your future opportunities? That shiny new car, that symbol of success, might actually be the very thing holding you back from achieving true financial freedom and long-term security. It's not just about the monthly payment, that seemingly fixed number that you've budgeted for. There are hidden costs, silent thieves, lurking beneath the surface, waiting to drain your bank account. These unexpected expenses creep into your budget and steal your future. One repair bill, one insurance premium, one tank of gas at a time. The dealership sells you the dream of freedom and status, painting a picture of effortless driving and envious glances. But the reality can be a heavy chain that ties you down for years, restricting your financial flexibility and limiting your life choices. Millions get trapped in a cycle of car payments, constantly trading in for the latest model, perpetually indebted and never truly free. This cycle seems normal because everyone else is doing it, reinforcing the illusion that car debt is simply a part of modern life. We think it's just a part of growing up, a rite of passage into adulthood, a necessary expense for navigating the world. But this habit is one of the biggest reasons so many struggle to save for retirement, buy a house, or invest in their future. Your car could be the most expensive thing you ever buy, a depreciating asset that drains your resources and hinders your progress, not just because of its initial price tag, which is often inflated with unnecessary features and costly add-ons, but because of what it stops you from achieving, the dreams it delays, and the opportunities it forecloses. It's about the life you could be living, the experiences you could be having, and the financial security you could be building if you weren't sending a huge chunk of your paycheck to the bank every month, simply to keep up with your car payments. Let's pull back the curtain and see the real cost of that new car, beyond the sticker price and the monthly payments. It's time to understand how a simple choice about what you drive, a decision that seems insignificant in the grand scheme of things, can either lock you in a cage of debt and financial stress, or set you free to pursue your dreams and live a life of abundance. The problem with car payments is that they trick you. Dealerships break down a huge price into small monthly chunks. Suddenly, a car you couldn't afford outright seems within reach. You focus on the £400 a month, not the $25,000 total. That's the trap. This cycle of debt is presented as normal. Financing seems like the only option, so you get a loan, make payments, and repeat. It becomes a habit, a subscription to a lifestyle that costs you more than you realize. We treat cars like a monthly bill, but a car is a rapidly depreciating asset. The moment you drive it off the lot, it's worth less than what you paid. Yet you're stuck paying off a loan for the original higher price. You're paying for something that shrinks in value every day. This is how car payments keep people financially trapped. It's a silent wealth killer, and it's so common we don't even see it as a problem. Let's break down the obvious costs. When you finance a car, you agree to a monthly payment, say £400 for 5 years. It feels manageable. But have you done the math? £400 a month for 60 months is £24,000. That's the real amount leaving your bank account. Dealerships make the monthly payment seem as low as possible, sometimes by extending the loan term. You end up paying for much longer, and the total cost is even higher. Even before hidden costs, the visible cost is huge. At the end of 5 years, you have a car worth a fraction of what you paid. You've traded £24,000 for the convenience of driving a new car for a few years. When you look at it like that, it's a very bad deal. The numbers don't lie. The monthly payment trap is real. Now for the sneaky part, the elements that aren't immediately obvious when you're considering buying a car. These are the costs that often get overlooked in the excitement of a new purchase, but they can significantly impact your financial well-being over time. Hidden costs. These are the expenses that lurk beneath the surface, gradually chipping away at your budget. It's crucial to be aware of these hidden costs before making a car purchase, so you can make an informed decision and avoid any unpleasant financial surprises down the road. First, interest. This is perhaps the most significant hidden cost associated with financing a car. You're not just paying for the car, you're also paying for the privilege of borrowing money to own it. You're paying the bank for borrowing their money. They're providing a service, and that service comes at a cost. Depending on your loan, specifically the interest rate and the loan term, you could pay thousands in interest alone, potentially negating any savings you thought you were getting. Next, depreciation. This is the silent killer of car value. The moment you drive off the lot, the clock starts ticking. Your car can lose up to 20% of its value, sometimes even more depending on the make and model. After 5 years of ownership, it might be worth only 40% of what you originally paid. That's a significant drop. That's a massive, invisible loss that many car owners don't fully grasp until they try to sell or trade in their vehicle. Then there's insurance, an unavoidable expense for any car owner. New financed cars cost more to insure, often substantially more, and lenders require expensive comprehensive coverage to protect their investment in the vehicle. This adds another significant chunk to your monthly expenses, further straining your budget. Finally, opportunity cost. This is the value of what you give up when you choose to spend money on a car. Every pound spent on your car, especially a new one, is a pound you can't invest in potentially higher yielding assets, save for a house down payment, or use to start a business and build long-term wealth. Your money is tied up in a depreciating asset rather than an appreciating one. These hidden costs, when combined, quietly drain your ability to build wealth and achieve your long-term financial goals. The true cost of a new car, when you factor in all these elements, is far more than the sticker price you see advertised at the dealership. It's money lost to interest payments on your loan, depreciation that rapidly diminishes the car's value, insurance premiums that add to your monthly expenses, and missed opportunities to invest that money elsewhere. That's how car payments can keep you running in place, like a hamster on a wheel. You never truly get ahead because so much of your money is constantly flowing towards maintaining this depreciating asset. Car payments quickly become just another bill. You set up a direct debit and the money disappears from your account. Debt feels normal and you get used to a chunk of your income being gone before you even see it. Saving and investing become afterthoughts. The car payment pushes your real financial goals, like building an emergency fund or saving for retirement, to the bottom of the list. After 5 years, your car is old, maybe needs repairs, and the temptation to trade in for a new one is huge. Dealerships know this and encourage you to start a new loan. You get stuck on a treadmill of car payments, always chasing the next new model. A significant portion of your effort goes to the bank and car company. You're always one unexpected bill away from trouble. The cycle is hard to break. So what's the alternative? See a car as a tool, not a status symbol. Buy a reliable used car you can afford with cash. No monthly payments, no interest, no bank owning a piece of your life. You're free. Take the £400 a month you would have spent on a car payment and invest it. Your money grows instead of disappearing into a depreciating car. This requires discipline and a change in perspective. Ignore the pressure to keep up with everyone else. The reward? Long-term financial freedom. Let's compare two potential futures, both starting from the same point, but diverging dramatically based on a single financial decision. We'll explore the long-term consequences of these choices, highlighting the power of compounding and the burden of debt. Alex buys a brand new car, fresh off the lot, with that new car smell and all the latest features. She commits to paying £400 a month, a seemingly manageable amount. But after 5 years, her car has significantly depreciated and is now worth very little on the open market. She trades it in, takes on a new loan for another new car, and the cycle repeats itself, locking her into continuous debt. By the time she reaches 40, she's spent 15 long years diligently making car payments, a substantial portion of her income dedicated to transportation. And as a result, she has accumulated very little in savings, leaving her vulnerable to unexpected expenses and limiting her future options. Now, let's look at Ben. Ben buys a reliable used car for cash, avoiding the trap of long-term auto loans. Instead of a car payment, he invests that same £400 a month into a diversified investment portfolio. After 5 years, assuming a reasonable rate of return, Ben's investments could be worth over £26,000, a significant nest egg. He understands the power of compounding and keeps investing consistently, month after month, year after year. And by the time he turns 40, his investment pot could potentially grow to over £120,000, providing him with substantial financial security. Meanwhile, Alex is still stuck in the endless payment cycle, constantly chasing the next new car and never truly building wealth. Ben, on the other hand, has life-changing money at his disposal, opening up a world of possibilities. He has enough for a substantial down payment for a house, allowing him to build equity and secure his future. He has a robust safety net to protect him from unforeseen circumstances, providing peace of mind and financial stability. Or he has the freedom to take calculated risks, pursue entrepreneurial ventures, and live life on his own terms. This isn't an exaggeration or some kind of get-rich-quick scheme. It's simply the power of compound interest and consistent saving, proven by simple maths. One path, the path of constant payments and debt, leads to a life of financial constraint and limited opportunities. It's a path filled with financial anxiety, stress, and the constant worry of making ends meet. The other path, the path of mindful spending and consistent investing, leads to growing wealth and financial independence. It's a path that offers financial freedom, security, and the ability to pursue your dreams without the burden of debt. Ultimately, the choice comes down to the kind of car you choose to drive in your 20s. A decision that can have profound and lasting consequences. It's a stark contrast, trapped in a cycle of debt or free to pursue your passions and build a secure future. So which future do you want for yourself? The choice ultimately is yours. This is about making a conscious choice. The car industry wants you to believe your identity is tied to your car, but that feeling is temporary and comes at a high price: your financial freedom. You can reject that message. Your self-worth isn't determined by your car. Prioritize long-term financial health over short-term status. Driving a modest used car frees up your most powerful wealth-building tool, your income. Direct your money toward assets that grow, not ones that lose value. Next time you're tempted by a shiny new car, pause and think. Choose the future you really want. The road to financial freedom starts with simple choices. Avoiding new car payments can change your financial life. The wealthy know, the person who looks rich and the person who is rich are often different. Imagine a life without car payments. Money flowing into investments, peace of mind, real freedom. It's not about never having nice things, it's about being intentional. Delay gratification today for a bigger reward tomorrow. Let your investments pay for your car, not your salary. That's the ultimate financial power move. The next time you see someone in a new car, don't feel envious. Feel empowered. You know the secret. Your reliable car is a symbol of your intelligence. It's your ticket to a wealthier, freer life. You're on the road to real, lasting freedom.